Hey guys, what's up? It's been a while. I know I promised a lot of videos and I've been a bit busy with hedge fund business and all that good stuff. All right, so upon request, I've been asked to do a video about the daily bias and how I go about, getting my daily bias. Now, I don't trade with a bias. That's the problem, right? So I don't trade with a bias because I'm a scalper. I trade intercession, and if I do trade with a bias, that will probably be in line with my larger trades. For instance, a short-term trade, a day trade, capturing the daily range expansion and all that good stuff. So if you want to know how you can stick to a certain side of the market to know whether, I'm going to be bearish, I'm going to be bullish, right? Obviously, I'm going to have to refer to ICT, right? So anyone can look at the market open from Larry Williams' work and deduce certain information from that. So no one has really patented anything, right? So I'm going to go ahead and do it. All right. So not patented. I'm going to talk about it, right? So here it is, the daily bias. Okay. So now as ICT uses, right, he starts at 12 o'clock, 12 a.m. EST, right? So 12 a.m. EST is over where. It is over here, right here. Okay, so that's 12 a.m. EST. So let's go to a higher time frame to make it easier. This is your 12 a.m. EST candle, right? Now, how am I going to know as a trader? How am I going to know whether I'm going to be bullish or bearish? Right? That's the thing. You must always refer to the previous day. All right. You must always refer to the previous day. Now, when I say the previous day, I'm not talking about 12 o'clock to 12 o'clock, right? I'm talking about 6 p.m. EST to the next day's 6 p.m. EST. So if we're looking at today, so this is today's price action. We're going to look at Friday's price action because today is Monday. Yeah, today's Monday, the 21st of February, right? So I'm going to look at Friday's price action, which is over here. So I'm going to find 6 p.m. EST, 6 p.m. EST on Friday would be somewhere here, right? Here. Okay. That's 6 p.m. EST right there. Okay. So I'm going to find 6 p.m. EST today. So 6 p.m. EST today is right here. So that's 6 p.m. EST. That's 6 p.m. EST. Now, you thought I was going to use 12, right? But I'm not. I'm only going to be using 12 when I'm referring to, what can that particular session do for me? What can that particular session do for me? If it gives us a Judas, okay, I'm going to sell from up there. If it gives me a Judas down, okay, I'm going to buy from down here. Right? So that's a session-based bias. So if I want to know what price is going to do throughout the day, I'm going to be looking at 6 o'clock. And I'll also be marking my reference points from 6 o'clock to 6 o'clock, right? Here it is. Now, if you look at this here, this is the previous day's high, right? And the previous day's low as well. It is over here. Right? It's right over here. This is the previous day's low. That's Friday's low. So technically, it's the previous week's low, right? Yeah, it's the previous week's low. So price takes are the previous week's low, all right? And you can see that all these intermediate highs or short-term highs over here, they are session-based, right? So imagine you take out a weekly low, you induce a session-based high. Are we still going to expect price to go higher? No, right? Different levels of liquidity have different levels of strength behind them due to the large volumes of orders that exist above or below the liquidity pools, right? So if this is a weekly low and this is a intraday high, right? There's a mismatch, right? If you want to see a change in the state from down here to go higher, you want to see price take this out and continuously displace higher. That is when you change or you flip from bearish to bullish. Okay, so look at this. Look at this. This is the previous day's high right here, previous day's low right here, or previous week's low and previous day's high. Okay, how am I going to deduce the bias for today, for this day right over here, right? How do I know that US 30 Dow Jones Industrial Average Index, how do I know it's going to sell off? Because if you can see over here, I'm in a NASDAQ sell here, and I'm in a German 40 sell here, right? So how do I know? How would I know to sell? That's a question, right? So if this is the previous week's low, look at this displacement. It's good. It's good, right? It's very good. This is the Asian low for today. This is the Asian high. So let me note that out for you guys. So here's the Asian high, and this is the Asian low, right? Now, If you want to see any form of a sizable move to the upside, you want to see this high get taken out. Why? Because if you were to look at this as a whole, we have this market swing, not market price swing, and this price swing, right? So this is the high that led to a new low and formed over here, right? So if you want to see that change of state, we need to see this get taken out. Then only we'll get the high move, or we get the up move, and from there onwards we can have a bearish bias. Okay. Now, if you consider this, okay, this opening price, it starts from here. We draw it out for you in a red line. Okay, this is the opening price here. Price caps it and goes up, right? So we take out a previous week's low, we run up. And now look at this. We take out the Asian high. See, we consolidated. We take out the Asian high. We induce this high, right? And then we start aggressively moving towards the downside. Okay. This opening price over here, what does it state? Or what does it suggest? It suggests that, okay, you know what? As a trader, fine. We rejected from the opening price and we are running higher. So obviously we should be bullish, right? But no. Here's the thing. While this is used to frame the daily range, right? We also need to consider what's going to happen in London, right? So now this is the part in which we are going to be using 12 a.m. EST timing. The 12 a.m. EST timing is right over here. All right. Now what happened over here? So this gave us context to buy over here. Now this guy, we go higher, take out the Asian high and see we start displacing down. The moment we started displacing lower, see, we crossed the opening price once and closed above. We crossed the opening price the second time and we closed below. What's that? A classic reversal signature. All right. So then price starts reversing. So am I going to be bearish throughout New York? Yes, I am. Because see, this is the 9:30 a.m. candle whereby NYC opens, price goes down, goes up, and we displace lower. So we are expecting price to go even lower. As a result, what's going to happen to my NAS cells? My NAS cells should go lower. Oops, it should go lower as well, right? About my German 40 cells, it should go lower as well. Taking out this low. Yeah, quick and easy targets, right? Now, how do I know to sell German 40, the index, when I'm in a NAS cell? Well, that's intermarket analysis. There's an SMT over here, carry that over to German 40, it's the same, all right? So that's the idea behind it. All right, you want to be using 6 o'clock, 6 p.m. EST and 12 a.m. EST. So first 6 p.m. EST. The 6 p.m. EST, what you're going to be doing is you're going to be marking your data points between the current day and the previous day. Okay. Then with the 12 a.m. EST, you're going to see, okay, you know what? This is what happened over here. And now we're going up and we're coming back down. We're closing down below. That's a bearish signature. So you're going to tell yourself it's a bearish signature and you're going to act accordingly. All right. Now, what's next? Let's look at one more example, right? Let's look at the previous data. So this is the 6 o'clock here, and this is the 6 o'clock, which denotes today. Let's go back. Use a replay mode. Okay, now remember everything I just said, all right? Now, find 6 o'clock here. Here you go, right here. Okay. On this day, what's the previous day's high? It's over here. What's previous day's low? It's over here. What's the previous session high and low? So we have, this is 3 o'clock. So this is the London high. London high gets taken out ever so slightly and drops. That's inducement. With these lows get taken out, lows get taken out, and this is the previous day's low. All right. Previous day's low. Now we're focusing on this day, right? Let's use another line over here for the opening price at 6 o'clock. Okay. Now we're going to be using the opening price for 12 o'clock. 6 o'clock, what happens? We came, rejected, and we went high. That's a good buy for Asia. Okay, that's a very good buy for Asia. Now see this. See this low? Previous day's low? Right. We range down below. We go down here, go up here. And the moment, right now, the moment we start going lower than this, right? That's when everything shifts. Or we have been bearish, right? No, but it gives us that confirmation. Okay, what? Tomorrow or the next week, we're still going to be bearish. Why? We traded below the previous day's low. Okay, we traded below the previous day's low, and we kept trading below it. Okay, we kept trading below it. Think of it like, think of your daily candle, right? If you have a bullish candle like this, okay, now pretend that this candle over here is your daily candle, right? A daily chart candle, a bullish candle. Let's see the next one. It goes above and keeps trading above this high. Now, if price keeps on trading above this high, it's working within its own range over here, right? And that's the range that's going to be used to go even higher until it starts to turn. Until it starts to turn. That's how you're going to be viewing this, right? So this is your daily low. Price trades through it and continues trading through it. What does that mean? It means that they're going to be using this range to go lower. Now look at the opening price. Open, down, displacement, displacement, and here's your sell. Or maybe even here's your sell. So you have a sell over here, you have a sell over here. Right? That's how simple it is. That's how I use it. That's how I use the supposed bias in my trading. Okay, when I want to use it. I don't necessarily know the bias all the time. I trade based on volatility, but it's all the same because I am in line with it, right? Now let's play it forward and let's see what happens next. Okay, we're playing inside that range. And there we go. We continue with the bearishness today. Okay, we continue with the bearishness today. Look at another example. Now that Sean, looking at information that's already available to us, man. Come on, let's do something else. All right, let's do it, man. So let's go random, 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 random. All right, so random. Okay, that. All right. Okie dokie. Let's look at the date. All right, so let's segregate the times. 6 o'clock, right there. 6 o'clock over here, previous day. Okay. Right on. Now let's look at this, okay? Previous day's high is where? Here. Previous day's low, it is over here. All right. All these liquidity pools on the buy side have been taken out, right? Now all we have left is sell side. Okay. Now what we need to do is we need to see, okay, over here, how do I know that we're going to continue bullish or we're going to go lower, right? That's the problem. So look at this over here. Obviously, we can deduce that price traded above the previous day's high, and we traded inside the range created to go higher. So that's how you determine a bullish day, or that's how you have a bullish price. Okay, obviously it's for a bearish price. Now here we have the previous day's high, previous day's low. Okay, this here, I'd say it's this one over here, this low. That's your previous day's PM trend low. Okay, that is your previous day's PM trend low. All right, what do you want to see? You want to see price take out this low. Okay, now number one, you want to see price take out this low and then give you some form of a retracement. Now stop. Before I forget, opening price is there. Here, 6 o'clock opening price is there. Do we have 12 o'clock yet? Yes, we do. 12 o'clock opening price is over here, right? It's not that perfect, but same, right? Here, we run down. Okay, fine. Based on this signature of price, we're expecting some form of return back into this. Or since we have this over here, we want to see price reject from here. So either way is fine. So we are prepared for both. Okay. All right. Okay. We take this low out. That's a cause for retracement. Let's see where it retraces to. Perfect. It retraces to over here. Why? See this? We are not certain on the bias over here. Not certain, not certain, not certain. Here is where we are certain. Certain that this is a bias. We want to see a retest of the daily open and fall through. Okay. This gave us a reason to retrace. There's a small buy over here. That's the sell. Price takes out this low. Price closes below the bodies of this this particular low. Right now, what we want to see is okay, the next day is price going to start trading below it. Then that gives us reason to be what? It's going to give us reason to be bearish. That's it. Okay. Now we don't care about this anymore. We understand the previous day low has been taken out. We're trading below it. Now what we want to do is we want to the next best thing. What's the next best thing? The next best thing is to mark the next daily open with the 6 o'clock and the 12 o'clock. So let's play it until 12 o'clock. Where's 12 o'clock? 12 o'clock is over here. right? So we should be expecting some more of sell-off as long as price doesn't go above this region of price. Okay, stop. Right. So here's the open. Here. Here's the open. Here. All right. So that's the open. So it's played out a bit. So we want to see bearishness. We want to see price drop. Okay. Displacement below both opening prices. See, we went up, closed down. We kind of closed above, but that's not enough. We closed lower, right? So see, this is the previous day's low from the other day. Price is trading below it. Now, based on the daily chart, what is it going to look like? This is going to be one big bullish candle here, followed by another candle going down like this. My candle is a black candle for bearishness, so it's going to look like something like this, right? So playing forward and let's see. There you go. There you go, guys. That is how you do it. That is how you use the opening price, and that is how you essentially you have to anticipate how the daily chart is going to form its candle, right? So think of your daily chart candles as your 5-minute, 15-minute, 30-minute candles. So see this here? Why is it going lower? Because the next set of candles on the lower time frame kept on trading low inside of their own ranges, right? Therefore, they went low. Okay. So is this the end of the day? Yeah. Yeah, that's the end of the day. So that's the bearishness. Now look at this, right? I'm going to keep the candles to denote the particular days. Let's look at whether the candles printed on the daily chart exactly the way we thought it. There you go. Here's the one here. Bullish candle, another bearish candle, right? And see the one that we just did, it traded through it, formed, played inside of its own range, and then dropped, right? Now look at this. I'm going to play one candle forward. So I think that's a Sunday candle. Okay, this we don't care. All right, now look at this. Okay, keeping this in mind, 8th of February. Let's go back to the 15-minute chart. All right, we go back to the 15-minute chart, and let's see, could we have anticipated this? Find your 6 o'clock. Find your 6 o'clock over here. And find your 6 o'clock over here. All right. What can we see? Here is your previous day high, right here. Okay, so here's the previous day's high. Here's your previous day's low. Okay. What happens? Price never really traded to it, right? Now see what happens. Okay. Come down. Okay. This previous day's high still remains. Now we have a new previous day's high. What is that? This one. We have a new previous day's low. What is that? This one. So this is an inside day. What's going to happen next? We're going to break above, right? Break above here, taking down that day's high. Okay, now we take out that day's high, and what's going to happen next, right? We now normally for reversal, you want to see price take out the high and start trading lower. But in this case, what happened? We did not trade low, right? Trading higher. We're trading inside of its own range. Here. Let's see what happens next. It should go higher by trading back into its own ranges. Okay, now let's watch how it just goes higher, because this over here, based on the daily chart, this confirmed that the fact that we traded above and we continue trading inside its own little ranges is confirmed that we are actually going to be bullish for quite some time. Okay. Stop. What's the date? It's the 9th of February. So now let's go back to the daily chart. Okay. See, bullish. Right. Then we clearly have this big crash over here on the 10th of February. Why is that? And now, before I get to the why, look at this. We traded through this candle's low and we continue trading below it. Therefore, we are going to be trading inside of every new range it creates. All right. So back to the 15-minute. So the crash is yet to come because it's delayed. Find your 6 o'clock. Use the 6. Yes, 6 should be here. I think it's this, yeah. Current is 6 over here. All right. Mark your liquidity pools. USD is high. USD is low. USD is London low. I'd say New York, New York, New York, New York, New York. Previous days, New York low, right? Let's see what happens. This is the previous day's low, okay? Top opening price, okay? 12 o'clock opening price, right here. Look at this. This is the displacement we want to see, kind of, right? This is the rejection we want to see. So from here itself, we can say that, okay, you know what? The likely direction is to be bearish. Okay, the likely direction is going to be bearish. Now let's see what happens over here. I want to see price straight through it, retest this area and continue dropping. Beautiful. Retest this area and continue dropping. Look at this. We took out the previous day's low. It is reactive by nature anyways. Goes back up, retest this, and if we went back up and traded above these highs, then it's a completely different story whereby we're bullish. But the fact that it displaced once more, came back here and displaced even further, it means that we are bearish. Okay, we are bearish. Now keep in mind what we learned today, right? This is the daily low. Price traded through it and it's continuing to trade through it. So are we going to be working within its rate? Are we going to be working within every new range created? Yes. Now watch as price tries to go lower. Every passing day. So let's go back to the 1 hour chart, not back, first time I go into it, right? Remove the lines, and now this set the stage for bearishness, right? Now let's just watch price plummeting. And that's what it's going to do. It's trading, see, it's trading inside of every new range created. Now it's displacing again. So you should try and trade inside of that range again. And now we should drop again. Very good. Drop again. See, that is how it works, right? I went to a completely random date. I don't even trade US 30 anymore. I only trade NASDAQ. So yeah, my first time looking at it, right? So it's a logic that matters. Okay, you can memorize all the patterns in the world, but they won't work without logic. Logic is context, right? So this is how it works. So the moral of the lesson is, if you want a daily bias, right? Look at your 6 p.m. EST opening price. It's your 12 a.m. EST opening price. Look at where is price relative to the previous day's high low, right? Is price breaking out and trading in its own little ranges after having breaking out of the daily highs and lows, right? Now, can you use this in every time frame? 100%. So I guess I'll leave that up to you guys. I guess you saw enough, you got enough information from me, and there are different ways in which I use this, but that's outside of the scope of the YouTube channel. Yeah. So you know where to find me. You can DM me, you can text me on Telegram or Instagram, anything, right? So I hope this was helpful to you. If not, then I guess it's not for you. Yeah, see you in the next one, right? So I hope, or I think that the next one should be even better. Yeah, I'll probably give you more information. All right, guys. So, all right. So that I'll see you guys in the next one. Have a good day. Have a good night. Have a good week. See you all later.